Hello and welcome to the latest installment of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like Washington State to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, we are reviewing a recent report by Alexis Waysand, writing for the Seattle Times, entitled Gabe Newell, founder of Bellevue's Valve, buys $70.8 million Florida mansion. And I will explain how small and medium-sized business owners are putting the law to work in their favor by moving their companies out of Washington State to sunnier climes and greener pastures. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, Gabe Newell, the co-founder and CEO of Valve, the company behind Steam, purchased a $70.8 million waterfront estate in Florida on June 15, 2026. The property, according to this report, is a 20,000 square foot mansion with 7 bedrooms, 13 bathrooms, a private underground tunnel to the beach, a dock with a boat lift, an 8-car garage, and a wine cellar, and it is located not too far from Mar-a-Lago. The previous owners of the mansion paid $39 million for it in 2020. And to put all this in context, Newell's estimated net worth is about $11 billion. GeekWire's headline asked the question that the Seattle business community is tired of answering. Did you really lose another Seattle area billionaire? Yes, they did. Another one. Valve is headquartered in Bellevue, Washington. Newell co-founded the company, built Steam into the dominant distribution platform for PC gaming. I've used it myself, and released franchises that defined the industry. He has spent recent years living and working from a fleet of luxury yachts, living the dream, I would say, rather than from Valve's Bellevue offices. The purchase of a mansion in Florida is not the behavior of a man who intends to maintain his Washington residency moving forward. As I have covered in earlier editions of Legal Bites, Washington State ranks at an abysmal 45th place on the Tax Foundation's most recent State Tax Competitiveness Index, and it has dropped 12 positions since 2020, that being the second largest decline of any state in the country in that time frame. Washington State imposed a capital gains tax at almost 10% on gains above $1 million, which was couched as an excise tax to survive a constitutional challenge that the state Supreme Court allowed to stand. Washington raised its state level estate tax rate from 20% to a whopping 35%, the highest of any state in the nation. The B&O gross receipts tax applies to every dollar of business revenue, regardless of profitability, and the gas tax is the second highest in the country. Contrast that with the Sunshine State. Florida imposes no individual income tax and no capital gains tax. Florida imposes no state-level estate tax. For a man with $11 billion in net worth, the difference between Washington's 35% estate tax and Florida's 0% estate tax is not a rounding error. It is a generational transfer measured in billions of dollars. Newell is, as you know, if you've watched earlier episodes, certainly not the first billionaire to evacuate Washington in favor of Florida. Jeff Bezos, the founder of Amazon, left Seattle for Miami. Howard Schultz, the former CEO of Starbucks, announced his relocation from Washington to Miami after Washington advanced a bill imposing additional taxes on residents earning more than $1 million. The pattern is remarkably similar. Washington raises taxes, The wealthiest residents call their attorneys and CPAs. The math points to leaving Washington. They leave. Each departure removes more than a single taxpayer. Rather, it removes the capital gains taxes that would have been paid on future investment exits. It removes the B&O tax revenue from the businesses the individuals control or fund. It removes the sales tax revenue from local spending. And it removes the state estate tax revenue that Washington would have collected at 35% upon the individual's death. Now, Newell is 63 years old. The estate tax savings alone on $11 billion at a 35% rate would exceed, actually be almost 4.8, excuse me, not 4.8, $3.8 billion, so almost $4 billion. That is the amount that Washington will not collect because Newell purchased a house in Florida and ostensibly is establishing his residency there. Now, Bezos left Washington, Schultz left Washington, Newell has left Washington. Several others have as well. Washington's response to the departures was to add insult to injury by raising the state level estate tax to what is now the highest in the country. Washington might once have had a reputation for being a pro-business, pro-entrepreneurship state. I'm sorry to say, unless you have some very rose-tinted glasses on, that is no longer the case. Now, with this context in mind, redomestication is the lesser-known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax consequences, but only when performed with the required formalities under the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When executed by a competent professional, the company maintains its existing federal employer identification number, contracts, credit history, and bank accounts. That is to say, when it is handled correctly, there is zero operational or financial disruption. I have successfully completed redomestications in one form or another from all 50 states, including Washington state, and for limited liability companies, partnerships, sub-S entities, and subchapter C corporations. Now, foreign entity registration is not the same thing as redomestication, because foreign entity registration, also referred to as foreign qualification, does not change the company's domicile. In fact, it does the opposite by keeping the entity in the former state, Washington in our example, indefinitely and merely adding a second layer of compliance and tax obligations in the new state. Meanwhile, a traditional merger, which is also not the same thing as redomestication, creates a new distinct entity in the destination state, may require the issuance of a new federal employer identification number, and can trigger serious tax consequences. Finally, dissolution should not enter the conversation at all because dissolution terminates the company. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event, and when performed incorrectly, can expose the owners of the company to unlimited personal, repeat personal, joint, and several liability for the company's liabilities, known and unknown. That is because the so-called veil no longer exists. So if you have a so-called professional recommending dissolution as a relocation option, please seek better counsel. Redomestication, when paired with a change of personal residency and that is an important and, a reduction or cessation of business operations in Washington state, can reduce or even eliminate state tax exposure there for the entity and its owners. Now, don't take my word for it. Ask your CPA. Now is the time to consider acting before the State House considers changes to the law to hinder or even eliminate the option of redomestication. If you have questions regarding potentially redomesticating your existing LLC or corporation out of Washington state or out of another jurisdiction, Please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information informative. As always, the information in this presentation is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations on these topics, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.